Hello, welcome to the European Open briefing for Wednesday, June the 7th. I'm Rafi Berjan, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So there's quite a bit of caution in the markets this morning, and this is because of a number of key risk events happening tomorrow on Thursday. We have, of course, the UK general election, but there's also some concerns about that testimony by the former FBI director in Congress in the US tomorrow, which that has the potential to cause further political turmoil in the US. We also have the European Central Bank meeting, so we're seeing most major pairs range bound this morning. The dollar is stuck near 7 months lows, the dollar index, and the pound is steady and fairly resilient despite many polls showing a very small lead for the conservatives, while the euro is holding near Friday's 7 months highs at the moment. The main data this morning was Australian GDP numbers, which came in slightly better than expected, and that did boost the Australian dollar. But let's start first with the US dollar. We can see here in the chart that yesterday dollar yen hit a 6-week low, 109.22 yen. It's currently trading not that far above that level at the moment. We have, of course, James Comey, who's the former FBI director who was sacked by President Trump. Due to well, he was sacked for not doing his job properly, allegedly. But the reason why he has to testify before the Senate Intelligence Committee tomorrow is so that he will reveal some details about his conversation with Trump into those allegations that President Trump asked him to drop an investigation into Michael Flynn, who was the former National Security Advisor, and if the situation does escalate, it could potentially further delay the Trump administration's tax plans. But apart from the receding expectations of a fiscal stimulus, we also have declining expectations that we will see a third rate hike by the Fed this year, following recent soft economic data. So all of that is weighing both on the US dollar and on Treasury yields as well. Let's move on to the Australian dollar now, because Aussie data was the key data this morning. We saw the Australian economy matched Netherlands' record of 103 quarters without a recession, and that's quite a big achievement. We saw Aussie GDP expand by 0.2% versus expectations it rose by 0.3% versus expectations of 0.2%. There were some fears that GDP might contract following some weak data recently, but it's still sharply down on the prior quarter's 1.1% rate, and it's well below the average for Aussie growth. The annual rate fell to the lowest since 2009, 1.7%. Let's not forget that we did actually see a contraction in the third quarter last year, so that explains the weak annual growth rate. But after today's data, although it's not strong, it's not bad either. The RBA is unlikely to change its outlook. We saw that already yesterday at the RBA's latest monetary policy meeting, although some analysts are still expecting a further rate cut later this year if growth remains sluggish. Let's have a look at the UK pound now, because we can see the pound has been seesawing all week, mainly due to varying opinion polls for the Conservatives. There was one yesterday which put the Conservatives' lead at 1%. Another poll late yesterday by Opinium that actually did provide some support for the pound, because it puts the Conservatives, that's the Theresa May's party, at 43%, whereas Labour are at 36% according to that poll. So that should give the Conservatives a decent majority, and that's what the markets are expecting out there. That's what they're pricing at the moment, which explains why the pound has managed to stay above the 1.29 level for much of this week. Moving on to the euro now, because the euro has been boosted by those expectations that the ECB will tone down its easing buys tomorrow. They will likely say that the risks to eurozone growth are no longer way to the downside. But they may even also drop their pledge of further easing in the future, given that that's becoming more and more unlikely. We saw the euro hit 1.1285. That was a 7 months high on Friday, and that's proved to be a major resistance area. We can see that the euro has struggled to break above that level since, and if it does break above that level, it will probably break above 1.13 as well. But for now, it's likely to remain range-bound until tomorrow's meeting statement and the press conference by Mario Draghi. Quick look now at commodities and several commodity currencies. We can see gold has been boosted by the risk aversion given the tomorrow's risk events. Yesterday it hit a 7 months high, $1,295.97 an ounce. It's slightly off those highs this morning. Oil, though, yesterday it did recover a bit and has been fairly steady since. We did have the latest API inventory numbers, which did boost a little bit oil prices. We saw US oil inventories, we saw a bigger than expected drawdown, but on the whole, the supply glut is still weighing on the market. We haven't seen too much of a reaction from that rising diplomatic tension between Qatar and other Arab states. It has had some impact on prices, but not too drastically. But the steady oil prices on the whole have provided some support for the Canadian dollar. We also have the Bank of Canada Governor Stephen Polo speaking tomorrow at a press conference following a financial system review for Canadian banks. So that meeting will probably be eyed, given the fact that we're seeing increasing odds of a Bank of Canada rate hike at some point this year. And finally, the New Zealand dollar yesterday, it did reach a 3 months high, breaking above the $0.72 level. That came after dairy prices, the global dairy prices rose at yesterday's auction for the 6th straight time. Let's move on to today's economic calendar. We can see the data out already this morning. We also had German industrial orders, which were much worse than expected, dropping by 2.1% in April versus expectations of just 0.4% drop. So that didn't have too much of an impact on the euro. There was some relief after the Halifax house prices in the UK showed surprise growth in May, following a different measure recently showing house prices fell. Coming up shortly, we've got the Eurozone GDP, the revised estimates for the first quarter. They're expected to come in at unchanged at 0.5%, but it's going to be fairly quiet North American session, with just building permits out of Canada being the main attraction. That's it from me. Thank you very much for watching and have a great day.